Welcome to my weekly update with me, Rich, market analyst at Handset Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we've certainly had the Doha meeting on the minds of traders. Now, this has been a key, crucial meeting that markets have been sort of waiting for throughout last week, and it's come up with no agreement on a production freeze through the OPEC and non-OPEC countries. And there has to now be a bit of a reassessment of the current state of play on the oil markets, and the price that has rallied so strongly over 50% in the last sort of couple of months now needs to be reassessed and as to exactly whether that's a level that the market is happy with. So we've had this rally, and the fact is that the markets have been sort of driving off the oil price for risk appetite, and that's sort of having a knock-on, or had a knock-on impact on the equity markets, the Forex markets, and also the commodities as well. So that needs to be sort of reassessed in the coming days, and I think it could take a couple of days to sort of really iron out exactly where the markets feel comfortable sat, because obviously what we had initially was a 7% decline on the oil price. That sort of pared those losses back to around about 2-3% down on the day. But now we've got the US about to come in, and whether that's going to have an impact. And so I think it's going to sort of take a couple of days to really sort of shake through the markets and to see exactly the direction of travel coming. Now, we've also got this week the ECB meeting. That is another high risk event. Now, the ECB is unlikely to do anything really this month, because it's only just introduced a whole swathe of monetary easing measures. We need to see more time and also see how they're implementing these measures. And it will be interesting to see whether Draghi again has to talk about the floor on the deposit rate, because last time out we had Peter Pryor just a couple of days later coming out and saying, well, there is still room for further cutting to the deposit rates, and Draghi seemed to sort of go against that in his press conference. So markets will be very interested to see whether that is the case or not. So where does this leave the Forex markets? Well, we've got a pretty sort of mixed outlook, really. Dollar's not really sure. It had been weak. It sort of looks as though, or certainly looked initially as though it's sort of looking to unwind some of that weakness, but generally speaking, I think rallies have been seen as a chance to sell on the dollar, and there's sort of further weakness that ultimately probably will be seen, or at least sort of a lack of dollar strength, or sustained dollar strength, shall we say. So you've got the euro dollar, which sort of had pulled back from its range highs. But I think pulling back towards, say, 111, 112 area would be a decent buying opportunity on the euro. Similar sort of story you could argue on the dollar yen as well. That was another key market, pulled up off the lows of that 107.60 level. I think again, if you saw, I mean, obviously the yen strengthened on the back of the Doha meeting, but if you saw any sort of unwinding on dollar yen back to, say, maybe 110, 111, that would be ideal in terms of a selling opportunity for the near-term bounce into medium-term downside once again resuming. Cable continues to be sort of weighed down by the Brexit issue, and I think generally speaking, rallies are continue to be seen as a chance to sell. You've got a bit of sort of UK data this week which could have an impact. You've got the average weekly earnings and also retail sales, which are big important numbers for the UK economy. So it'd be interesting to see if that has sort of a volatility impact on sterling this week. What about the equity markets? Well, we've had a strong rally actually on FTSE 100, for example, which broke out to the upside. DAX couldn't quite break out, couldn't quite find the range break above the 10,122 resistance, but it is interesting to see that the DAX is now rolled over. Again, generally speaking, equities are sort of under a bit of corrective pressure following on from this Doha meeting, but it'll be interesting to see if the DAX now sort of starts to range sideways, because it certainly looks as though FTSE, for example, has broken out in a positive fashion. The S&P above 100 still remains pretty bullish above 2022 to 2034. So it still seems as though these equity markets are hanging on for now, but as to whether they sort of roll over and start to sort of churn sideways, it'll be interesting to see. In terms of the commodity markets, well, we've always had the gold price, which is interesting because it's rallied, but now it has started to sort of develop into this sideways trading band between sort of the bottom, comes in around 1190 up towards the top at 1282, and it's sort of midway between that, and not really seeing any major traction sort of few days up, few days down. I think that's going to continue to be the case in the coming weeks and months, possibly. In terms of the oil price, obviously, as I said, Doha has the prospect of a correction. Now, there's downside that we saw early today. Will it continue? It's likely to continue because the oil price has had such a big rally, and it could now start to be that rallies are seen as a chance to sell on the oil price. But as I said, when the US comes in, we'll be interested to see whether that continues. Now, in terms of what we're looking out for the rest of this week, we've got, as I said, a little bit of UK data for the weekly earnings and the retail sales, neither of which are expected to sort of do too much in terms of change from last month. We've got a bit of US housing data, but again, nothing too significant. And the main focus, I think, will be on the ECB. So nothing too great to shake up the markets this week, but still focusing on that Doha meeting in the early part of the week. So I wish you good luck in your trading this week, and I will speak to you again next time.